so much for that introduction, and thank you to our audience for joining us bright and early today. Today we're talking about strategizing finance in a tech world, and the last panel as well, which was so insightful, also delved very deeply into AI. This one's going to be no different. We're going to be finding out how all our esteemed CFOs on this panel are tapping into AI and Gen AI, not just in their finance operations, but right across the enterprise. So without any further ado, I want to get into the discussion, but before that, since we have a lot of CFOs in the audience and those on the panel, I would like to start it off by asking something I'm curious about, right? What is one stereotype about CFOs that you think is both unfair and untrue, but you find a lot of people cost you with this one? Pulkit, would you like to go ahead?
That's a tough one. So good morning, everyone. I think we still have morning. I think I will say two things. One, the perception of CFOs or finance leaders always saying no. I think most of us would acknowledge, but I think the way I see it as also one of the CFOs amongst you, that actually by saying no, probably our expression could be better, but basically we want to enable the deliberation and discussion on topic. So, I mean, as you know, the manthan, that's how I would kind of call it. So by saying no, actually they want another response from the other party so that eventually the decision that we make is actually in the interest of the organization. So that's the way I see it. The second one, I happen to note it in this room, and I've seen it, in a couple of other ET events too, that CFOs don't clap enough. So I'm sure Kashita.
I think we can do louder. I think we can do louder to disprove him. Come on.
So I'm sure we'll prove Kashita wrong, in this session and also the sessions afterwards.
Well, that's a very good one, Pulkit. All right. But the second point, I think everyone's working on that right now. The first one, do you actually say no or do you say let's see?
Sorry.
The first one, do you say no or is it more let's see which becomes a no?
I would say both, but as I mentioned, I think the intent behind is the manthan, the discussion.
All right, the tug of war. Super. All right, thank you for that. And Bitu, go ahead.
Hello. So adding on to what he said, very early on, when I was, very early in my career, one of my CFOs told me that, don't start a discussion with no. The moment you say a no, you kind of put a block in front of everybody. I think one of the most common stereotype, which and everybody gets very generalized on that, is bean counters, balance sheet keepers. Finance guys are only here to take care of P&L and balance sheet. I think it's so very untrue. We, as CFOs and everybody out there, would kind of agree with me. We are not here to just, write accounts, right? We are here to do much more than that: analysis, transformation. Today, most of the CFOs also take care of technology in their organizations. So, process ownership, transforming the way we work, looking at businesses, looking at what we can do much, much better, from improving the margins of the organization, which is not just writing the PL and the balance sheet, but improving the overall ecosystem and environment in which the organization operates. And I very firmly believe that CFO is at the core of everything. He actually is probably the only person who sits in between and interact with every other function in the organization, be it marketing, sales, production, supply chain, etc., etc. So being there at the core, we are much more than just counting numbers. We are much more than that. We develop and we put in all the right manure into developing the entire ecosystem. Thank you.
Much more than just number crunchers, absolutely. And I think we've learned that over the last few years, and we're going to learn more about that today.
Hi, good afternoon, everyone. I think very well agree on the 2 points what the fellow panelists mentioned. One, we are not, like generally what we have been perceived as a compliance keeper and the record keeping bookkeeper. But I feel right now the role of CFO is more of a business partner. We are the best business partner right now. We are only next to the CEOs and all the decisions. I think even CEOs nowadays bounce out to CFO. Like I've seen practically, and I think everyone would have faced that. Every decision while CFO would have CEO would have agreed, but they would want to say that, okay, ek baar jaake CFO ko dikha do. If he agrees, then I agree. So it's more of a business partnership right now, more than a compliance function. That's, I think, the myth which is changing over a period of time. And secondly, I think what rightly said as a no, we are the person we say is no. But I think in a car can go at a higher speed only because if you have confidence on the brakes. If the brakes are good, your confidence on the brakes are good, that's the way, the speed you can tend to drive very well. So we act as a brake. If the team or the company or the promoter has a confidence on us, that okay, if something is going wrong, we are here to take a final look. I think that's where the thing comes in. So we are not here to say no, but here to take care of that nothing will go wrong, or at least we have an eye on that side. So that's largely my take on it. Thank you.
Good to know.
Hi, good afternoon all. On a lighter side, let me start with saying that, generally the stereotype is CFOs don't wear jeans, right, in the formal events. I thought let me break that, and that's how,
Casual Thursdays. Yeah.
casual Thursdays. On a serious side, I think when I joined, especially for the startups, right, when I joined here in board, the expectation was to ensure the controls compliance, and in Aman's typical ways of communicating, yaar IPO kara dena. But the role of CFO is beyond IPO, beyond controls and compliance, right? And this is where I think we are changing the mindset, not only, let's say, me leading for the function. I think the entire function who is with us, right, is kind of really leading the value partnering piece of it, right? How does finance do the value partnering with, let's say, the co-founders, CEOs, the marketing functions, that how do we get the best ROI? And I think that's mindset is something which we as CFOs need to change, and hopefully we'll be able to succeed.
I think from my side, the CFO stereotype is purely where we see that, we are number driven and lack of strategic and, more of a creative visions. So today, if you look at it, most of the organization, all the roles, responsibility, objective, vision, mission, everything is actually, CFO is playing a larger role. So CFO is always a strategic leader, but certainly, he's a financial steward for sure. But this is the one piece which I will say. I think the second is no is now converting into different way. Now we are saying no, but we are at the same time also suggesting forward path, what can be done differently. Okay, so it's more of a growth partnering approach nowadays in the CFOs rather than a traditional mindset approach like, more of an accountant and this thing. So this too is certainly happening. Thank you.
All right, so now when we invite you to our events, we're looking forward to never hearing no, but perhaps a pivot of your strategy. Super, thank you so much. And with that, let me actually dive into the first question. As we heard from all of them, we're no longer number crunchers as CFOs, no longer just looking at compliance, but actually taking care of a lot of business functions, the rollout of technology. So keeping that in mind, when it comes to emerging technologies, of course, the focus is on AI and Gen AI specifically. How do you decide which part of the enterprise gets that rollout first, apart from the financial operations, of course? And what are the most value accretive projects that you look at to roll out these emerging technologies? Of course, the Pareto's principle always applies. So how do you go about this? And who would like to take upon this beast of a question first? Go ahead. Verghese?
Yeah. So, so my thoughts are as initial as what AI is at this point of time. There's a lot happening in the background. What we see in the front end is something which it's just the tip of the iceberg, right? As a CFO or as a core management team, when we look at AI, generative AI, and I'm talking about predominantly from the organization that I'm working for as Tablespace, which is a managed workspace organization. We kind of build offices for our clients. Not just build, we also take the lease, we build, and we also operate it. We are a tech-led company. We have a full stack tech team sitting in our company. Everything that we do is tech-enabled, which means technology enablement, AI integration, right from sourcing, understanding the demand to what do we want to do, how do we want to optimize. the smallest of the thing, like, how do you want to optimize the parking lot, right? All of this is driven by AI. All of this is driven by, a lot of technology that is there, and you inbuild all this technology using your own team to drive not just generation of business, but delivery of the projects, and then to maintain and sustain the client and the client relationship. So it goes through a full circle from a business point of view. Now, having said that, what do we do as finance guys as far as tech is concerned? How do we look at it? I think there's a lot to be done. Risk management, audit, analytics. There is a humongous set of data that is available out there. You kind of look at what are the, and again, it's all agile. Your decision to how to enable AI, machine learning, generative AI, whatever, is completely agile. It's an evolving process. You build block by block, and you address your critical issues one by one. I think that's, to sum it up, what I think about it.
You say build it block by block, but which block gets the most importance?
I think that's what I mentioned. See, from my point of view, there are two pillars to it. Business. So you enable business. You enable all the pillars of business over there, which means to generate client leads, to understand. For me, acquiring the right asset, commercial real estate, is very important, because that's supply, that's inventory. If I don't have artificial intelligence sitting over there and telling me which clusters to look at, I would probably be over-invested in a certain market, which will bleed on my profitability. So everything comes to a circle. So you look at what is the business enablement that will lead to a healthy P&L and a healthy profitability. That's one pillar. And the other pillar is within your domain, your core domain. I would not say your domain, I'd say your core domain, which which people expect you to deliver, is the finance team. In that, what are the things that you can do from an analytics point of view, from a risk and assurance point of view? These are the two key pillars that you will first build, and then everything else can be built on top of that as you grow.
If I can add a couple of points to what Bittu just mentioned. So, for me, since you said that which block would come first, if whenever this topic comes on my desk, I divide it into two parts. One is compliance, and then other is, of course, business. For me, compliance would always get the first priority, if I have to choose between the two. So as an internal framework, I have allocated a fixed sum in a year, completely focusing only on regulatory, tech upgrades. And of course, then we will prioritize. We can never be, absolutely, compliant to the T. Then we prioritize and make sure that, that gets utilized. And then when it comes to the business side, I think already, the gentleman here is covered. But one important element there, from my perspective, would be what's the strategy. And I will limit this to, say, finance function. I come from a large, diversified industrial conglomerate. So while we have a lot of technology deployment, on the business side, most of my focus kind of remains on the financial technology deployment. The most important thing that I would focus on there is what's the strategy. And again, that would be different for me and also for some of you here. Imagine, and just to give a little bit more color to it, if sometimes you get asked this question in the meeting, that, why is it taking, say, 20 days to close the books? Because we are already losing 20 days of, time to go to the market. Then probably that, should become one of your priorities to say, okay, now my strategy is how do I crash my time by, say, 10 days or 15 days? And then I think you have to put all our weight together, on, this particular technology to cut the time as much as we can. So, I think these are the two things which I just wanted to add by giving my perspective. Thanks.
Super. And I want to delve into compliance slightly more into detail a little later on, but would love for everyone else to respond.
Broadly, if you ask me, I will put it into, let's say if you have to construct a building, right? The foundation of it has to be, getting your basic work, which is, let's say, reconciliation, your month close process, all those things, get those efficiency built in, get them automated, right? So that that, Pulkit mentioned that the faster closing process can be achieved. And then on top of it, like I keep saying that, how do we do the value partnering part of it, right? How do we get the weekly cash flow forecast in place, right? On top of it. Let's say once my bandwidth is released in doing those routine work, like how do we get the weekly cash forecast automated? How do we get those tools help me weekly cash forecast better? Or let's say the forecast for next 3 months better so that I can manage my working capital inventory better. And then of course, once this, the ground floor foundation is laid down, then on top of it, get some of those fintech tools integrated with your main IT system, be it SAP or be it Oracle, any other function, any other IT tool, so that you can leverage what's available in the market and what's available in-house. I think that's how we look, try to use AI and machine learning.
You said let's think of it like trying to build a building. So I think best to get Girish in there.
Hi. I think right now it would have been easy for a CFO if I can prioritize, okay, this is one, this is two, if it was sequential. I feel right now the way technology is going, it's not sequential. You have to attack many problems at one go. We generally divide it into 3 to 4 buckets. First bucket would be customer experience, like how this tool can impact the customer experience from where the main sales and the customer experience and the ratings are coming in. That would be one. Secondly, would be on the process part. How this, whatever the technology or AI, what we are trying to use, how it will improve your process. Either it would be just reducing your time and thereby enabling you to plow back more profitability. I think that would be on the process side. And the third would be on the compliance side, what rightly mentioned, the cost of non-compliance today is very high as compared to any other thing. I think on an average, every company would be having a profitability of, say, roughly around 10%. The taxes in India is roughly around GST 18% and income tax put together, it would be around 50 to 60%. So the cost of non-compliance is much more than your profitability. So I think we'll have to invest at the same time in 3 to 4 buckets at one go for AI, and we have to take calls which tool will help you get more returns. I generally believe on the process side, my team should be gradually involved into analysis part, and if the day-to-day routine process can be taken care by AIs or any machine learning, so those processes we can outsource on a daily basis, on immediate basis, and the teams largely should be, or the brains should be used largely for processing the information and taking the decision basis of the information.
So I see it in 3 parts. One is automation, which is process automation. Then you have augmentation, which is facilitated by AI. And then you have acceleration, right? As of now, would you agree that all CFOs are concentrating on automation? Lalit, would you like to talk about that?
So let me give you a very different scenario here and what is applicable in our company. Okay, our company is a trading company and we do almost $3 billion of trade across the globe in 29 countries through various subsidiaries, right? So everyone can do buy and sell activities. So what we can do differently, right? There is a differentiator which we can create with these technologies, right? We very recently did a blockchain-enabled transaction. And I can tell you initially, going for these kind of concept was not so easy because you need to onboard so many stakeholders in this process to really enable this transaction. But I can tell you the results were transformative. Okay, beyond saving the tangible benefits in terms of reducing the several days in terms of the whole transaction, and as you can calculate the ROI or whatever it is in form of $3 billion trade, if you save even 2 days of working capital is what going to make impact on you, right? So not only this, but in terms of the biggest thing what Girish just mentioned, what is important is how are you able to create that transparency and trust with the stakeholders, whether it is suppliers or customers or bankers, right? This is what is today the need of the hours. And this is where the AI or advanced analytics or blockchain we did it, but certainly AI and advanced analytics also are really helping in terms of achieving this larger goal that how can we bring the trust and transparency in the system and how can we co-create the growth which others are also feeling like a partner because they are also partner in this journey through one platform.
That was excellent, sir, that you've enabled a blockchain-enabled transaction. And like you said, You must have had so many stakeholders as part of this decision. So that's great to know, and thank you for sharing that with us. Now I'll delve into a word that CFOs are associated with, and it's inescapable, which is compliance. So when it comes to AI, how specifically is it helping you with financial reporting and compliance, and what process is it making easier for you? Which function? Who'd like to take that on first? Lalit, would you like to go ahead?
See, I think what is happening today in the finance role is, if you look at it, everything is almost getting automatic. Every day when you see there is a new thing is coming, right? If we are going to have a traditional mindset to say that we have a people to do the consolidation or process and all, it's not going to go, in future like this. We need to see that we use this AI for all our automation of accounting and compliances. We also need to see that we are going to deal supply chain in a way through a blockchain. And also we need to see that we shift our focus on a data-driven approach, because these kind of insights are really going to help. So many things are evolving. Even today, I don't know many of you must be, experiencing. We used to have a bank reconciliation is one of the biggest process, right? Today, banks and companies are working on a virtual account. There is a API tool, there is a linkages, and there is nothing called bank reconciliation no more in our system. We can simply enable AI tools and log in and see that there is a real-time, reconciliations and everything. I think the way tools are emerging, right? We need to adopt it quickly and see that compliances and accounting and as well as audits all together. Very slowly, we are not going to do the data-driven things. It's more of analytics and more of, decision-making process, which are really going to be the key things, which I look at it in future.
Pulkit would like to add to that.
Sure, thanks. As you can see, my company's name has automation, and not just, for a couple of years, but since past 40 plus years. So we breathe automation, and of course that reflects a lot in our finance processes as well. And to build on, what Lalit just mentioned, the three qualities or the attributes of technology, I think we are embracing all three of them together, which you just highlighted, Shilpa. And we are trying to take it to the next level. For example, FP&A. Instead of having your FP&A colleague next to you, we have actually created a COE of FP&A globally. So the simple mantra in our organization is we are not using spreadsheet. I hope no one is here from Microsoft. Of course, we are, buying other products, to kind of, take the finance organization to next level. And whenever we are doing our pulse meetings or review meetings, we are directly logging into our FP&A dashboards, which we call digital finance, and actually getting into the thick and thin of the business pulse then and there. And the other example, since you specifically asked about compliance, and that's why I actually gave much more importance to it than any other technology deployment that I would do, of course, with a prioritization. It's impossible to track the compliances in India, unless you have a tool in place. And again, the gentleman already here covered that, the cost of non-compliance could be really very high. Do you really want to waste your time on manually monitoring those compliances? And just to let you know, since we are an automation company, we used to have our own compliance management tool until 2 years ago. But then we eventually moved because we saw that we are unable to catch up with the growing trend of significant changes in the organization, in the regulatory framework. And the third and the last is also, if some of you are from public companies, the compliances for public companies have also significantly evolved. And the recent change of rumor verification, where you have to actually track your share price with any news article, whether in mainstream or non-mainstream, it's again just humanly impossible to track that. So, from my perspective, I think it's touching all the three attributes of technology.
Thank you for
Shilpa,
sharing
just,
that. Yes,
yeah,
please go ahead.
add one point on the compliance part. I think most of the people out here and every company right now, the specific tool they would be using is the GST input tax credit matching. I think the onus of government is now on us that although we are paying GST to the vendor, but it's the onus of the company who's paying the GST to ensure that the seller or the vendor has deposited it. It's not only deposited it, but they have also filed the return correctly. And once that is done, then only you will be able to take the input tax credit. So I think matching it, that's one automation process what would be there. But after matching, in case there are non-compliances on that side, identifying that vendor or doing follow-up with the vendor, and in case does not happen, then blocking or recovering that amount. I think this is one general automation or AI where we are using to a large extent from the compliance perspective. Secondly, what we are also trying to do, what we are doing right now is the data entry system. When an invoice comes in, like everyone mostly are working on some of the softwares like SAP or Oracle or some other ERP solution. So instead of a person punching in the data when the invoice comes in, through AI, can a bot take care of that, read the invoice which comes in, match it to SAP, match it to their purchase order, work order, and ensure that the bills are booked directly out there. That's the second automation tool we are generally trying to use in wherein a whole lot of data entry people can be used for a better productive rather than putting the data. Third, I think the most important function for us, especially coming in a real estate industry, is forecasting the future, wherein the automation would be very much required. Just giving an example from a real estate side, we are locking a sale transaction today at the current price, wherein the delivery of that product or the unit would be happening 5 years from now. So the cost is not known today, it's estimated, but the sales price is frozen. So the AI would be very much required to ensure that today whatever the estimation has been done, this is all that data information available and building in few forecasts and the past trends, we arrive at a price which at the end of 5 years when you're actually delivering the product, you are in positive and not in negative. Yeah. So these are the very few things, I think, and these are just at the tip of the iceberg. AI, I think there are a lot of things that can be done through AI and Gen AI, which over a period we are continuously looking at to adopt. Yeah.
Yes, absolutely. We're in the third wave where AI is being implemented. The second wave, of course, being where data analytics were deployed. And as you were saying, right out there on the dashboard, you have all that data out there and AI helping us mine that data in a better manner and come up with those forecasting and predictive models. Let me take that across to Rakesh. You know, how are you able to tap into AI for your forecasting predictive models, and how useful or better has it been as opposed to how it was manually being done earlier?
So I think broadly, and I tell you, you know,
Mike.
sorry, broadly what I can tell you that, you know, pre and post what we saw that, you know, and the clear impact on financials, right? We didn't have any forecasting tool for let's say S&OP process. S&OP is largely sales and operations planning, right? And we were doing something in Excel, and then with our you know, kind of business, we have a large dependency on China imports as well, because though we do manufacture in India, but there is still a large dependency on China. And there is always a cycle when, you know, the festive season comes in, you have to pre-build some of the inventory. There was a time when we had almost 5 to 6 months of inventory, right? Because we were not able to forecast it better. Let me put it in that crude language. But I think since last one and a half year, we have been able to implement a tool called F9, which is really tells us that how your performance, let's say the business performance has been for last 3 to 4 years, how this is going to behave, considering, you know, what's happening, let's say, with Flipkart, with Amazon, with your own website, with your GT business, and this is how the trend is looking like. I think from those 6 to broad numbers, I think close to 4 to 5 months inventory, it has come down to roughly 30, 45 days, right? And then that's discipline. We have been able to manage, right, with those tools. And overall, the ordering cycle has improved significantly. I think this was a clear example I could see that, how some of those tools can really help you, reduce the working capital impact.
Yes, of course, taking a look at the sort of weather that's going to be there in a few months and the other variables that AI can take account of, I think that definitely is a very great example that you provided
Exactly.
from your own company. And thank you for that. I'm going to open it out to the audience for questions. I'm sure you have questions for all of them from all these varied sectors and they're so articulate. But before that, I have one question which I must pose to them, right? As CFOs, now of course you're embracing technology, but when it comes to each new technology, you may not have complete in-depth knowledge of it. So when you're asked to asked if a certain technology can be adopted in a company, how do you go about that? Do you try to understand it, or do you leave that understanding to somebody else and just look at the business goals that it's going to further? How do you tackle this problem?
I can start
Okay,
that.
sure.
If you ask, it's very, very important for us to define the business objectives, right? There are many emerging technologies, serving different purposes, right? Is it the technology to, let's say, create a revenue impact? Is it going to help us reduce cost? Is it really going to help us gain that customer experience? I'm saying there are multiple tools. Hence, that net benefit and net cost has to be evaluated based on that. There will be quantitative metrics which you will have to look at because ultimately it's going to impact your P&L balance sheet, right? But there will always be qualitative metrics. I think Girish mentioned that customer experience is very, very important for us. And, especially for a consumer tech or consumer, products organization, customer experience is equally important. And I give you an example. We have a tool which really, and they're with the help of AI, right? We get roughly 1,000, feedback, suggestions, inputs on a daily basis. Our AI tool helps it, analyze it, and mold it in such a way that we are able to respond it faster, right? 1,000 responses in multiple languages, right? Converting into the best possible language to communicate, and then responding to the customer in the, in the best possible time is something which AI does. That's really customer experience for you. I'm saying that there are many such things, and therefore, qualitative metrics can't be ignored, and hence, that's also need to be kept in mind.
I would want to add over here, and this is on a lighter note. Not sure if people have seen this movie called Hidden Figures. So Hidden Figures is about this movie about a bunch of people who this is set in 1961. NASA, when they wanted to put their first manned astronaut in the space, and there were no computers. IBM had first developed the first computer over there. There were a bunch of ladies who used to do all the manual calculations. They were called computers because they had to compute all the coordinates and statistics and everything to figure out the trajectory and XYZ. And while the project was going on, IBM came up with their huge, big computing system. And people thought that all these computers will get redundant, right? The human computers. What they did was really smart. They actually went back, they took up all the manuals of IBM, they did a self-learning. They understood how to use this system. And when the decision was to be taken, the IBM guys came and said, we need people who are going to operate this computer, right? And then there is this bunch of computers who were manual computers. These ladies were ready. They had reskilled themselves, and they were ready to move from being a manual computer to be the ones who use the computer. The moral of the story of what I'm trying to say over here is AI. Earlier it was computers, now it is AI. And the technology is going to continuously improve, right? Adoption of technology is for each and every one of us. It's on us as CFOs to drive the change. It is not just us, but also our team members, each and every at macro levels, to figure out what is the change, adapt to that change, and build in AI as a culture into their daily, day-to-day work.
Do you incentivize this? or do you ensure that everyone is compliant with this change?
Let me take this. See, maybe I would like to give you a very different dimension on this. Every time we talk about ROI, right? This is what is return on investment, right? So, for my first 20 years of experience, I was also like all finance folk, continue to see that ROI is very, very important and all. But let me tell you, in last 5 years, I learned very different things, right? And I came to know that there is another crucial factor which we need to know, right? ROI or ROC, whatever return on capital we say, it is return of capital. So it is not only return on capital which is important, return of capital is more important than return on capital. And let me explain you why. One of our segment where we deal it is the trading businesses, right? In trading businesses, typically globally, you go with Trafigura, Glencore, or any commodities, you will have a margin of 1 to 3%. They never make 10% or 20% margin. So we are putting our 100% capital to earn 2% margin. And you all know the probability and the risk while dealing with globally, while dealing with subprime, tier 1, tier 2 customers, suppliers and all, right? So what is important today is the return on capital or return of capital. Both are equally important. And I think when we analyze this tool, right, what we need to look at it, are we putting this tool to assess our risk, identify the challenges, and how are we able to mitigate more better all such risks, right? If we are able to do and safeguard our capital, I think any investment what we are doing in form of whether it is called AI to more of routine transactions and maybe getting more better insights, informed decision making, advanced analytics, all blockchains, all are justified. But I think we need to think differently in this side to really assess what kind of priorities in our organization at this moment we are having, because every organization will certainly have a different priorities for sure. But I think this concept I learned in my last 4-5 years to really see that return of capital should be a big parameters to look at it, not only return on capital or return on investment, whatever we say.
Yeah. Shilpa, I think it's a very good question what you have. A lot of IT guys, and in fact, day in, day out, I compare the IT guys with my teenage daughter. Like every time a new iPhone comes in, she will come to me that the new iPhone has come in and I need that iPhone. I think my IT guys are also almost like that. Every time a new technology, and the way the technology is coming, evolving, every new technology comes in, it is the best technology in the world and we should have it as of yesterday. So I think the basis, the decision what we take is what Lalit also just mentioned. What is the benefit what we are going to get basis adopting this technology, and something what we have already adopted a year or 2 years down the line, how and when we have utilized that or fully utilized that or not. And in case we don't adopt the new technology, what is the drawback or the impact would have on the business? I think these 3 or 4 parameters what we try to work upon, draw inferences basis that, and then take a decision whether the new technology is to be adopted or not adopted, or adopted now or 1 year or 2 years down the line.
All right, Pulkit, go ahead.
Yeah, sure. I just wanted to add additional point as Lalit talked about, the cost and the famous ROI phrase. It's, I mean, while of course he explained about, it's not the question of ROI every time, but another element which is important is, which I call, in my day-to-day life as cost swapping. And what do I mean by that is that, about 3 years or 4 years ago when we had, to work from home, due to, the COVID's havoc. And as we gradually return to work, I mean, even till today, we have 80% of return to work. That means 4 out of 5 days. But if, one day when I was reviewing our capacity utilization, the office space real estate capacity utilization was, on an average around 50 to 60%. The question that I asked then my team, that when real estate is, the peak utilization is say 60%, then why should I not give up my 40% of the real estate? And the saving that I will get from that, I would rather like to use and fortify our IT system and also improve the user experience, employee experience, and eventually, of course, the customer experience. So for me, I think it's also sometimes a question, and for me, IT security is again a very important element within the compliance bucket. I don't think we would like to, mess with that. So I think we need to also figure out what are the other opportunities available outside of, I'm only referring to the functions which I can directly influence. Thanks.
It's a pleasure listening to all my panelists. And I have so many questions, but I can't be selfish. I do want to open it up to you. Who would like to go ahead with the first question? Yes, sure. Can we get a mic to her, please?
Mr. Rakesh Thakur, thank you for your insights.
Thanks.
Can you share or repeat the name of the AI tool which helped you in working capital management?
So that's something which we have built in-house, but there are tools available. Let's say I was talking to one of the firms, which is IBS FinTech. They have very, off-the-shelf tool which you can easily deploy and use it for weekly forecasting.
Thank you.
Anyone else has a question? All right. Okay, so great. I can go back to my questions. In the meanwhile, if you do think of any question, you raise your hand. I'll get a mic sent across to you. All right, I think we have to wrap this session out. But before we do that, we're going to be entering 2025 in a matter of days now. What do you think is going to be your biggest challenge as a next-gen CFO going into 2025? And what, in that year, what do you think is going to be the emerging challenge that you will have to tackle? Pulkit, go ahead. And then I'll come to you, Lalit.
A lot has already been said, and I'm sure other finance leaders will speak about it too more, that, CFO's role have changed a lot, and you have to juggle a lot of balls in your hands. For me, the biggest challenge would be allocation of my time. And I think as we get pulled into so many topics, and CSR 10 years ago, and then now sustainability, ESG, and of course, cybersecurity compliance are always in our pocket. So how do you prioritize and reduce the number of surprises and focus on things, which will help propel the growth of your company?
Well, I really wish everyone all the best in streamlining that and having the ability to streamline the time and operation. Sure, Lalit.
See, I think in 2025, the biggest challenge I see is change management. Because the technologies are keep on coming, and every day we see increasingly, importance of whether it is AI, blockchain and all. But I can tell you, we need to first change our mindset because it is not easy. We need to first adopt it, become a tech savvy, and we cannot say that, okay, let AI will come or someone will come just from outside and, implement something for us. We need to know it first, take first-hand experience, and then only we will be able to actually, do it more within our organization to convince people. So I think the change management, I believe, is going to be the first step in 2025 from my side to see that we can do more and more such digital enabled transaction, which is really going to make sense for future, the whole growth of the company. So this is one I look at it. I think the second I look at it is, increasingly when we are going digital, the risk is also emerging in a big way, right? We have never heard that cyber insurance kind of thing. Maybe 5 years before, no one was talking about cyber insurance, right? But today, if you look at it, the kind of the risk, the kind of the issues with the data security and the protections are coming. I think this is another piece and the layer we need to build, because to sustenance of our business is now increasingly depending on digital security as well. So these are the two pieces I believe is going to be the focused area, apart from, of course, doing a lot of integration with AI tools.
Just like we want our ERPs to be agile and ever adaptive to evolving landscape, I think you are saying that CFOs also need to imbibe those qualities. Absolutely. Go ahead.
I'll add to what Pulkit said and completely agree. I think we need AI to manage our time. we've been as CFOs, we've been center stage for a lot of activities now. As you mentioned, ESG, CSR, governance, technology, process changes.
It's easier to list what you're not taking care of at this point. Yeah.
Correct. So with that, we definitely need some AI tools that are going to help us with that, and managing growth. I think the India story is great. GCCs, all of those factors are positively contributing. So India growth story is something which is going to be center stage for all CFOs to take care of and manage within their organizations as well. So I think these are the two most important things.
Yeah. Shilpa, I have a different perspective on this. I feel the biggest asset a company is having today is the manpower, their people. So managing and engaging the people, their team at this stage, if you throw some redundant processes on them, the people will move out. There are a lot of opportunities available. I think the biggest fear today is like getting all the new generation coming in, new chartered accountants coming in, which they don't want to do the regular processes. For me, the biggest challenge is keeping the team intact, keeping that motivated, and ensuring that they are doing value-added work and not the redundant processes. How do I invest my time and I do the people invest their time on that? I think that's the biggest challenge. And with the use of technology, if we can ensure that the redundant processes are taken care of by the technology, and the people who are coming in, we are using their brains for value-added things and all. I think that would be the biggest challenge for me. How do I engage? How do I ensure that the people are totally engaged into it?
I think Lalit also brought that up. Change management is going to be the single most biggest challenge. And also, as you said, reassuring people that they are going to be moving up the value chain and not being made redundant, and only the processes are going to be made redundant.
Just want to give you a very live experience. When we went for a blockchain transaction, right? It was very difficult for us to convince businesses why should we do for it. What is the benefit they are going to get, because things are already working, right? They are selling, buying, everything. What is the need right now to go for it? So it was increasingly difficult for us to convince that and finally we decided let's do it. And I can tell you, no one was ready at that time to just, see that, okay, should we do it or not? So it's more of a conviction that we need to start at our own mind first, and then actually, we will be able to drive it very seamlessly across the organization. And that's the reason I'm saying that first we need to get more first-hand experience really to know, what kind of changes these kind of technologies can bring. And then it will be very easy for us to give these benefits to others and then, take them on this journey. That's what I look at it.
We started off with Pulkit saying he doesn't like to say no. And then you said that. I believe we have a question there. All right. We will come to you. I'll just have one word from Rakesh on what he thinks is going to be the biggest challenge.
Broadly, I think it's largely covered. I think apart from what's happening in this geopolitical scenario, if I just restrict, my response, or let's say challenge part of it is only to digital or the tech space of it, I think the adoption, so we have of late in last one and a half year, we have, implemented a lot of tools, right? I think the challenge is going to be how do we best adopt, beyond finance, right? Finance is good in, getting those things automated, bring those efficiency, but organization at a large has to start adopting it. Let's say we are just going to implement something called, which is discount schemes related, right? Evaluation tool. How sales at large starts using that and starts bringing the efficacy in their spends, right? It's a large spends we do. I think the adoption for me is a big challenge. And Girish rightly mentioned that, manpower, or let's say that the bunch of talent you have, right? How do we keep them motivated? I think that's another, because we have a good bunch of talent, right? And who are more ambitious than us, who want to, let's say, grow faster than us, right? How do we keep them motivated in next few years, right? So that they stay with the organization, be motivated, and go for the kill.
Excellent. Great hearing from you. We'll go across and take a question quickly. I believe we literally have a minute left. If we can get a mic across to him then.
Hi, sir. My question is that as AIs are getting smarter over a period of time, and they have already replaced a lot of jobs, do you see someday a company will have an AI itself as a CFO instead of having like humans taking the decisions? Because generative AI is already there.
Maybe let me take a quick stab here. I don't think so, and not because I'm saying because I'm a CFO. I think there are a lot of judgments involved, and as I actually started by discussion by saying that when we say no, it is to invoke a conversation, a deliberation, and eventually come to very informed decision. And I wish AI can do that. And there are also a lot of emotions involved, right? I mean, all of you know. So from my perspective, I don't think so. But definitely CEO role has already been, by the way, AI'd in Poland. You can just Google that. So your job is safe.
Okay. So CEOs, not so safe, but CFOs, you believe, will be safe in the future. All right.
No, I do not. I think I really thank Mr. Modi, PM Modi, that he has ensured that the CAs and the CFOs' jobs are intact for next few years.
Ever evolving, ever compliant, absolutely. And I think we're wrapping it up right on time. And that's the end of our time. Thank you so much. It's been a great discussion. I loved how seamlessly the conversation flowed and some valuable points there, very insightful indeed. Thank you.